In case you missed it earlier this morning, USDA announced an overnight sale. It was a sale of corn, and it was our old customer back to buy more corn. It was China back to buy 1.156 million tons, and it was for old crop delivery. So they'll take that any time now. So that'll help a little bit, you would think, at least. Now let's see if it's actually showing up in the trade. Well, on the corn market right now, with our quotes provided by Bar Chart, boy, it's just not getting much of a kick out of it. It did get up to 555.5 early on, right at the open this morning, and now we're at 551. So we're only a penny and a half higher right now. We have December new crop corn currently trading at $4.75 per bushel, and that would be down 3 3/4 cents right now. On the soybean trade, with our quotes provided by Bar Chart, May down a penny at 14.18.5, and November down 2.5 at 12.41.5 per bushel. And let's check out our wheat market. It started out under quite a bit of pressure today. We've come off of the earlier lows a little bit. We have May Chicago wheat 4 1/4 lower at 6.40 3/4. July new crop down 6.5 cents right now. Kansas City, we have the May contract down 8 at 5.98 3/4. So now below that $6 benchmark. And July down 8.5 cents at 6.03 1/4. It actually got as low as 5.96 3/4, and it bounced about 7 cents, and we're still down 8.5 cents on that new crop July. In the Minneapolis spring wheat trade, May down 3 3/4 at 6.35 1/4. July down 4. And in our cotton market, now cotton, of course, is trying to claw its way back after some selling here recently. July cotton now up 40 points at 88.16 per pound. In December, up 28 points at 83.83 cents per pound. Let's go to, let's go talk with Brian Hoops. He is the president of Midwest Market Solutions in Springfield, Missouri, and let's take a look at our market action here up to this point today. Brian, good to have you with us here. It looks like there's no shortage of moisture in the Midwest to get our new corn and soybean crop up and going. And in fact, I was just reading a little bit ago where corn planting is pretty active in southern Texas, even in Louisiana. I understand we have like 14% of the corn crop already planted this year, so we're starting to get a good start.
Yeah, you're right, Marlon. Good morning. Talking to clients in Texas this morning who've caught up or completed their corn planting. They were behind normal for a couple weeks, and they've been making great strides here after the rain kind of quit in Texas. They were very active and were able to get that crop seeded. So back to normal pace. There's not much of a threat that they're going to switch out of corn into cotton or another small grain at this point. So it looks like all those acres that were planning on being seeded have been seeded for the corn market. And you can see December contract coming off of its highs. Ever since we turned the calendar to March, the contract started to give back some of its earlier gains that we saw in January and February. That was the time when the USDA surveyed farmers of their planting intentions that will be reported at the end of this month. And the new crop corn and new crop soybeans have really struggled since that time frame, still holding up trends, but not able to really build on anything, as the market is sensing that we've probably are going to shift quite a bit of acres into corn and into soybeans. In fact, we've been hearing maybe even 94 to 95 million acres of corn being seeded this spring.
So do you think that spread between the old crop and new crop on corn and soybeans could widen out even quite a bit more or not?
Well, yeah, it certainly could here in the near term. You saw the big export sale this morning to China. That was a huge number. We're not getting a lot of traction out of it, but it does tell us that we're still selling a lot of crop. And then our inspections that came out yesterday, that tells us how much product we're actually shipping overseas. That was a marking year high for corn. And so we really don't have a demand problem with the corn market. We're using a lot of corn. Ethanol usage is starting to pick up as well. So I think, USDA is still trying to tell us that ending stocks are going to be tight, but maybe not as tight as some of the trade had expected. Last week's supply and demand report really didn't make any changes at all. And the USDA has just kind of been very cautious about making export revisions. But certainly USDA right now, if you look at the pace of our sales and our shipments, we're well ahead of what the USDA is projecting.
One thing I did want to point out was the energy markets are weaker, and that could be holding the corn back a little bit. April West Texas crude oil down $1.10 a barrel at 64.29 right now. Diesel fuel is down about 2 pennies so far today. We'll come back and we'll take a look at livestock trade with Brian Hoops after this.
Singer named Simon.
In the canola prices, and right now on the canola market. Let's see if we can get that to come up here. We have the May contract $1.30 lower at $801.60 per metric ton, and you have the July contract $3.40 lower. This is in Canadian currency, and we are now priced at $746.90 per metric ton. Just wanted to point that out. We have a survey done by USDA each week, and it has to do with the national retail meat prices around the country. And they survey promotions all around the country. This is what they came up with last week. On the beef, the weighted average price, $5.86 a pound. That's up quite a bit from the $5.49 the week before. A year ago, it was $5.13. Now, on the pork side, they had an average of $3.47 a pound compared to $3 the week before. A year ago, it was $3.26 a pound. Chicken, $1.96 last week. The week before was $2.06, and a year ago, wow, it was down there at $1.45, just for a point of reference. Well, let's take a look and see what our futures are doing on live cattle right now. And currently, we have the live cattle market, and we have the April contract 37 lower at $118.75. June down 75 cents at $121.02 per hundredweight. So the weakness increasing a little bit. We have the feeder cattle market on the April down 65 at 143.27. May is down just a nickel, so the softness continuing in the feeder cattle market as well. And on lean hogs, we're surging ahead, led by the nearbys. It continues. April up to 35 at 92.90, and June and July are still way over $100 on both of those contract months. So let's go back to Brian Hoops. What about this cattle market here? Cash cattle trade, nothing going on yet, but if you look at the wholesale beef trade, the beef cutout values, it's not like they're offering a lot of support here to the cattle futures. It's kind of like pushing that rope uphill like we talk about from time to time. Choice cuts down $1.10 yesterday afternoon. Selects down $2.22. We'll get a new update here in about a half an hour, but is that holding back this cattle trade, in your opinion?
Oh, yeah, absolutely it is. You know, the futures market trying to anticipate the cash is going to come up, and we saw contract highs yesterday in most of the feeder cattle contracts, in the August, October, December live cattle contracts. Those third, fourth quarters looking ahead and anticipating cash is going to come up. And even April holding a premium of $5 over the cash markets this week, anticipating cash is going to be much firmer and trying to work higher eventually by the time that April goes off the board. And with these cutouts sliding, it's going to be very hard, I think, for the cash to come up where the futures are. We may get a small bounce this week with the show list numbers being down, but certainly the cutouts are a drag on the market. It's hurting packer margins. They've got a lot of margins to work with. It's just a matter of, do they want to share in those profits with the feedlots?
Good point. Big question this week. Thanks, Brian. I appreciate it. Brian Hoops of Midwest Market Solutions. Tammy, back to you.